Gloomy outlook for gold, and Biden administration cut some big checks for battery metal miners. This is a Kitco Roundtable. I'm your host, Michael McCrae. Kitco correspondent Paul Harris is here. How you doing, Paul?
Hey, Michael. Very well, thank you. How are you today?
Let's turn to macro. There's a lot to cover. It's sinking in. The Federal Reserve is hell-bent on taming inflation. It will let the U.S. economy stall, a scenario that is bearish for stocks, bonds, commodity markets, but bullish for the U.S. dollar, writes Jim Wyckoff for Kitco. S&P Global concurs. It calls gold an unexpected loser of the current macroeconomic environment. With its safe haven status and direct competition with the U.S. dollar, S&P forecasts gold average price to tend lower until 2026. If you're looking for a bull, Nouriel Roubini likes gold due to everything else being awful. Gold will protect against inflation, political and geopolitical risk, digitization of the dollar, and environmental damage. Roubini sees the US dollar getting hit by inflation and its safe haven status eroding. Midweek spot gold dipped into the 1620s, approaching its lowest level since the start of the pandemic in 2020. WTI crude spent the week in the 80s. Dr. Copper is not willing to give up the fight yet, so-called since the price takes the temperature of the economy. Copper is supported by a tight supply and energy transition. It has been holding in the $3.40 pound range. We're going to bring back Paul in a minute, but first our sponsor. Snowline Gold, ticker SGD on the Canadian Securities Exchange, is a Yukon-based explorer with one of the territory's largest mineral portfolios, amassed privately over 3 decades by prospectors Ron and Scott Berdahl. Snowline plans to go big. It is focused on a district-scale greenfield gold discoveries with the goal of finding world-class gold deposits. The company has consolidated districts. Snowline controls 254,000 hectares across a prolific yet unexplored geological analog to Nevada's Great Basin. The company is primed for discovery. Its extensive database from over $20 million worth of prior work has generated geological models and high-priority drill targets. The company is also backed by some of the best. Significant shareholders include Keith Neumeyer, Eric Sprott, and Crest Cat Capital. Snowline is supported. It announced a non-brokered private placement of $25.23 million in July, making it well-funded for future exploration. Learn more at snowlinegold.com, ticker SG on the Canadian Securities Exchange. Again, that is Snowline Gold. We thank them for their support. Paul, what caught your eye in mining?
Well, first off, just something on Snowline. They announced this morning they've got another big land package out there in the Yukon to add to what they already had. So good news there. Wood Mackenzie highlighted the uncomfortable truth that there are not enough metals for the energy transition this week. In Red Metal Green Demand report they released this week, it said the mining industry needs to deliver 9.7 million tons of new mine supply over the next decade from projects that have yet to be sanctioned to meet zero carbon targets. To do so would require the sector to deliver new projects at a frequency and consistent level of financing never previously accomplished, with more than 23 billion US dollars of investment a year in new projects required, which is 64% higher than the average annual spend over the last 30 years. Anyone who thinks the copper price will stay under $3.50 per pound is delusional. My comment, not Wood Max. IAMGOLD this week agreed to sell to China's Zijin Mining its 95% interest in the Rosabel gold mines in Suriname for $360 million US dollars cash and release of IAMGOLD's equipment lease liabilities. The remaining 5% interest in Rosabel will continue to be held by the government of Suriname, and the existing royalty on Rosabel will remain an obligation of IAMGOLD. This is another asset sale to cope with the massive cost overrun at IAMGOLD's Côté Gold project in Ontario, which is due in production in early 2024. The share prices of the 7 senior gold stocks, including Barrick Gold, Newmont, Agnico Eagle Mines, and Newcrest Mining, are down an average of 30% so far this year, according to Paradigm Capital's October gold equity performance statistics. The gold developers fared even worse, with an average share price fall of 38%, with silver junior producers whacked even harder, down an average of 51% year to date. The mid-tier companies and royalty companies fared somewhat better, having seen their share prices fall by an average of just 19% year to date, although the best performing mining sector, quotation marks there, has been the senior base metals producers, who are down just by an average of 12% this year, excluding Turquoise Hill Resources, which has seen a big boost due to a takeover from Rio Tinto. The sorry state of affairs helps explain why Equinox Gold announced feasibility study results for an expansion to its Los Filos gold mine in Guerrero, Mexico this week, which will extend its mine life to 14 and a half years, but the company has not taken a construction decision. The expansion would increase average annual gold production to 280,000 ounces a year through to 2036 at an all-in sustaining cost of just over $1,000 per ounce. The expansion will yield an estimated after-tax internal rate of return of 26% at a base case gold price of $1,675 per ounce. However, Equinox has not yet approved the construction of the CIL plant. Equinox is currently building the 1.23 billion greenstone mine in Ontario in Canada, and the downturn in the precious metals prices has impacted its ability to self-finance its growth through cash flow. In August, financial services firm Desjardins said it believes the greenstone build will leave Equinox treasury bare if the gold price averages about $1,750 an ounce for the remainder of this year through to 2024, even after the company drawing fully on the credit facility expanded in July. How bad is the precious metals equities market? Well, Omai Gold Mines more than doubled the estimated resource at its Omai Gold property in Guyana this week to 3.8 million ounces in all categories, yet the company has a market capitalization of just around 17 million Canadian dollars. That's about a $4 per ounce valuation. The battery mineral graphite also has a forecast supply deficit on the horizon, which is why Japanese giants Mitsui and Panasonic signed a framework agreement with Nouveau Monde Graphite to foster the development of its ore-to-battery market integrated graphite project in Quebec in Canada. If Nouveau Monde's material qualifies, Panasonic will offtake the active anode material. An August 2022 feasibility study detailed Nouveau Monde's plans to produce 103 tons per annum of high-purity graphite concentrate for more than 25 years from its Matawini deposit in Quebec and Nanoplard at Betancourt nearby to produce 43,000 tons per year of anode material, a $1.4 billion development. Nouveau also entered into a $50 million convertible note financing with Mitsui, Pallinghurst, and Investissement Quebec.
Now, Paul, maybe it's worth a reminder mentioning Nouveau Monde and its agreement. There's binding agreements, there's non-binding agreements, there's framework agreements. What's the difference?
Well, I think the non-binding agreement sees a battery producer or similar, want to put their foot on a certain amount of future production. But the key thing in a lot of the battery minerals, lithium, graphite, is that the mining company, the provider, has to get their product qualified with the user. And that's a process that can take several years. So in this instance, Panasonic saying, if your material meets our requirements, we'll take it. And the financing is to help Nouveau Monde get to that point in time by doing the future tests and studies, etc., optimizations, so that its material will meet Panasonic's specifications.
To bring your top story to a close, and Wood Mackenzie talking about pipeline, the Department of Energy is helping out, or I should say at least is helping out downstream. It's cutting a lot of checks for battery metal miners. Notably, though, that they're cutting those for processing facilities. Notable announcement were Piedmont Lithium, which got $141 million for a Tennessee lithium processing plant. Talon Metals getting $114 million for a battery mineral processing facility in northern Dakota. And Syrah Resources getting $220 million for an anode plant in Louisiana. So almost, how would you be counting it up? $500 million worth of announcements over in just the last week. The Biden's Inflation Reduction Act is providing financial assistance to make investments to fund energy transition. Let's turn to our number of the week. Paul, you have a lot of numbers.
I've got a big number, 96.5 billion. 96.5 billion US dollars to be exact. And that is the aggregate market capitalization of the top gold producing companies, according to Paradigm Capital's report, which between them produce some 21 million ounces of gold, just 96.5 billion.
My number of the week is 20%. Small modular nuclear reactors have a problem. They require a special fuel, and the fuel just has one source, and that's Russia. The fuel is high assay, low enriched uranium, which is enriched to levels of up to 20%, rather than about the 5% that is used typically for most nuclear plants. Without a fuel resource outside of Russia, investment in the space is threatened to be curtailed, although it could be a market niche for China, which has not cut trading ties with Russia. That's it for us. Paul, I understand that you have a conference that's going to be coming up.
Yes, on the 8th of 9th of November, we're doing the CGS Copper Gold Symposium in Medellin, Colombia.
That's it for us. You can follow me at Michael McCrae. That's McCrae with 2 C's. Paul is at Paul Harris Gold. If you like what you hear, tell a friend, don't forget to subscribe. On behalf of myself, Paul Harris, have a pleasant weekend.